Yep. Um, Let me know if you can hear me. Yep. Let me know in the chat if you can hear me. I just want to be sure. Yes. What's going on? Let me know where you're joining us from. You're gonna be having a full analysis today. Yeah, we're gonna get started now. Okay. I can see you can hear me loud and clear. That's good. Yep. We had a great week trading this week, and just gonna get it all started now. Okay, how's it going? Where are you joining us from? Let me know. I'd love to connect with you guys. Where are you joining us from? Let us know. We're gonna get to it in a few seconds. It's not gonna be a long live. Just um, looking at what we're gonna be doing tomorrow. As you all know, if you're new to this place, this is Yemi from FX, and I'm more big into GJ. But listen, every single way in which we see the market is definitely applicable for all kinds of instruments you want to actually trade. So we're going to be doing some very interesting breakdown for the market right now, and I'm going to be doing step to step, and this is going to be my outlook for next week. Um, I'm thinking of starting to do all of this right now. Um, Coming over the weekend to kind of just giving you guys an outlook of what I'm seeing this new week, and I think that would make a lot of sense. Let me know in the chat if you would love to get this live we're about to get. Let me know in the chat if you would really love to get this every week, just to give you guys an outlook of what I'm looking at and perhaps trades I'm looking to take next week. Let me know. Okay. All right. Uh, Someone says Nigeria, not my country. That's funny. That's funny. Mm. Uh, I think one of the best places to be a trader is when you're in any part of Africa, provided because you don't get to pay tax, right? You don't really get to pay tax. So whatever you make is yours. So if you could focus on being very profitable, I could tell you for a fact that it is you know it is gonna be very good for you. So Sometimes, you just wish you're back there. Um, okay, I'm just gonna get straight into it. As you all know, I trade pounds JPY, and if you're still asking the reason why I focus on one pair, you know, it is very very simple. The reason for that is because I the reason behind that is because I ultimately advocate for you focusing on one instrument and really understanding how this instrument works basically. And if you really understand that, number one is going to lower the numbers of trades you pick. It's going to decrease your tendencies to over leverage. And another thing is really going to do for you is it's it's really just going to allow you to focus on one pair and be extremely so good at understanding and analyzing that pair. That's just my personal sentiment, but someone could have a different view to that. But it has worked for me personally, and it's like you've been trading pounds JPY for 7 years, and you kind of know everything this market can do. Like, even you win or you lose, you kind of have an understanding. When you win, it reinforces your confidence, and when you lose, you can tell immediately what you did wrong. And that's the beautiful thing about knowing your pair, clearly. So one or two pairs are good, and when you get to a level of start to trade at a very high level, you're gonna start to realize that you don't need all the pairs to actually do something really significant, in the market. And that being said, yes, I don't know, maybe next week you'll see me here again doing the same thing. Um, Now let's get into what we want to do today. So what I want to do with you guys today is just break down the market through my lens, and how I do it, and give us a possible trade outlook for what I'm going to be looking for in the next week or next 2 weeks, and what I'm going to be trading, and just take a review on what we did this week. I sent two trades out. In fact, getting into this week, we were on a very on a trade. If you guys can remember, I mentioned that we're gonna take a trade right here, and we're gonna be selling it all to the way to this down part, and we have a TP1. We have a TP1 and TP2. If you guys can remember, I sent it to my free Telegram channel. So if you know my Telegram channel, you can go join my Telegram channel here. I really do post some stuff here weekly, and you're gonna see a lot of posts, and off of that level, off of that channel, soon as soon as possible, or frequently right now. So I dropped this trade, and I said we're gonna be having one to this level, and we should be looking forward for the final TP back to this level. And it's so crazy because the market did that. This was supposed to be a 1:3.9 trades, but I did close this trade, somewhere around this point. I closed at 1:1, because at the time I wasn't really feeling this trade as much. So I did close this trade right here, and I dropped another trade because I just feel like the market was making a move of higher highs and the higher lows, and you can see that the market at the time was giving us this higher high, higher low, higher high, higher low. And I saw that the market was giving us this at the time. This was another higher low, and I was looking at a situation whereby the market might actually come back to this level and fill it up before it starts to drop. I actually sent and shared everything to the group. So I closed that trade, got into another trade. Any trade you see me share, definitely I always get into those trades. So I sent a trade like this, which is supposed to be a 1:4, and I was thinking that the market will make a new higher low somewhere around this spot right here. Then if we can get a new higher low at the spot right here, then we can be able to get into the market. But the market never did that. So the market got me back on break even because I was risking 1% of my account. And when the market did that, what are we supposed to do? Nothing, right? So when the market came on here, so and that happened I think on Monday or Tuesday. So when the market came up right here at this level right here, I sent in a new trade, right? If you guys can remember, I sent in a new trade opportunity right here. So this was the trade I sent. So I sent in this trade and it played out just perfectly how I would want it to be. That was about 1:4. And what was the whole idea behind this trade? It was very simple. So the moment I realized that the market was dropping off of this level, which was what we intended for the market to do, sometimes it happens in the market where you know the market kind of changed sequence at some point, because as at the time when I sent this trade opportunity to the down part, I haven't seen this higher low right here established, right? So just a few, it's so amazing how just one information could just kind of give you, a different outlook of the market, only for the market to play in that way it happens. So don't beat yourself out whenever you have that kind of experience in the market. The best thing is for you to just align whatever the market is doing. So as at the time the market fell to this point, so what did I really do? It was very simple. I came back to the 4 hour time frame to kind of have a clear view. So the moment the market did that, I knew that the market was coming for this spot right here. I knew the market was coming for this spot right here. So when immediately I saw that, what was the next thing I did? I went on the 4 hours time frame. I understood that the market took off this low at the time. The market took off this low at the time, so I would expect that the market will give me some kind of retest back and for further push so that we could sell the remaining leg of the market. So what did I do? I came on the 1 hour time frame. So on the 1 hour time frame, I identified this level right here, which is just a very simple, the market eating this previous area of support right here and possibly turning it into a resistance. But what are my other confirmation I was looking out for? Number one, I have a full context of where I want the market to go, right? Which the market was dropping right to this level, and the next thing was just to take out this trend line. I saw that the trend line was hitting the market right at that point, and the moment the market gave me that rejection, I just got into this trade because the direction was quite clear. All you have to do was just to join what the market was doing, and you have some very good trade. I think I got it somewhere around this point right here, and I think I had about 1:4 thereabout. And this was a very good trade actually. This was a very, very good trade, and we ended up, closing last week profitably. And before I get into what I'm thinking the market would do this week and analyzing with you guys right here, I would love to speak to psychology, because you know me, I always talk about psychology all the time. How the week start doesn't define how the week is going to end, right? And sometimes when we take those losses, it can want to destabilize you mentally, right? You may want to say, "Oh, let me get back my money," and that is usually the error that a lot of like traders commit, right? Where you find yourself wanting to revenge or make up money lost, and that is usually the error that a lot of like trader makes. So be as very calm in loss as much as you are excited in winning, right? So maintain the same level of calmness. Don't be overly excited in terms of winning, or don't be overly angry and revengeful in terms of losses. The best mindset to be is to just have a clarity, accept the loss that comes with it, provided that your risk management is very solid, right? You don't really need a lot, right, to you don't really have a lot to lose basically, because it's just you maintain the same risk. And this was just a very simple idea of what we did. So why this trade may look very easy, remember I have the context of where the market was going initially, right? And the context of where I thought the market was going initially based off analysis. And I think my last video on YouTube, the second part I mentioned it out in the second part, right? And the moment you realize that this is where the market is going, right? The direction has been established. It's just about finding those level where the market kind of give you like a break and continue to move in the direction of trend. So it wasn't something really out of the norm that I did. It's just about understanding the context of trend and finding a level, a key level of interest, right, where the market might actually be rejecting. And in this case, it was this area of previous support that was broken right at this level, the market retesting that zone back and the market dropping. So my other confirmation was just that level intersecting the trend line. So when I saw that pin bar rejection right at this level, this pin bar rejection right here, we knew exactly that the market was ready to, drop down to the downside. So the biggest, I would say the biggest thing to know here is just once you know the direction of the trend, the rest is just a history. So now let me quickly get into what I'm looking out for this week, and I'm gonna be doing this, week by week, so that you guys can experience my life. Lately, I've been trading more privately, and which is good, but I can't help because I love to teach, and I get this so many emails from you guys. Many people that have gotten profitable off of my YouTube channel, and I drop everything for free. You guys can always go there into that. And if you want to further your knowledge, yeah, you can reach out to us and we can get you signed up on our mentorship. And these days we're not taking a lot of students anymore. I just want to deal with few, but bringing the best out of them, and that works for me. So let's get into what we're looking this week, and this is where it gets really interesting. I love to analyze the market. I find it very beautiful to analyze. It's always very easy when you understand the market. And if you ask me what is the most important thing, that skill that you should have in the market, you should be able to know this market so much from a point of storytelling. Yes. So most of you have seen how I analyze the market. I story tell the market. I talk about where the market is going, what it's doing, and I extract this story based off of what I'm seeing of structure. And I'm gonna say this for real, 100%, that the most important thing that you want to be able to master in trading is just structures. Honestly, ICT, SMC, this strategies works for individuals, but at the end of the day, there's a common denominator in all of it, which is chart structure. Regardless of what you're trading, like if you ask me right now, what kind of trader are you? I'm neither ICT and I'm either SMC, whatever people call it. I don't really like to box myself. I'm just a guy that understand how the market moves, tell the story, and make trades based off of that. So many people might say you're discretional. I won't say I'm really discretional, but I'm just very objective. I stay in the market. I understand structure, because go around and look at every single strategy that's in existence right now that people trade. There's a common denominator around them, and this common denominator is chart structure. So if you're watching me, I would say if your level of chart structure, level of understanding of chart structure is really medium or is just average, I don't think profitability is something you should be looking for right now. You're going to make some very good wins, but you're going to make a lot of losses. So what can keep it consistent is when you know structure. And why is structure really important? Structure is really important because number one, you need structure to be able to know the trend. And because a trend, let me explain this idea to you guys, then we're going to go into the live. So let me say, for example, the market is moving right here on a trend basis. So I would say this is on a trend basis. So it's easy for you to know what a trend, where a trend is going to, right? It's very, very easy for you to know where a trend is going to. But when you look at it through the lens of structure, there are so many structures, right? There's so many structures that form in between. There's a mix of different structures and they occurs in different fractal, right? So sometimes the market won't just hit this level. Sometimes the market will make another, retracement down. Then the market will go up again, another retracement before the market hits this level, right? And this is what makes it very hard for traders, right? Now, a lot of people might take a trade from this level and think, yes, the market is going to this resistance. I'm just trying to give you an hypothetical example, right? So let's say, for example, you took a trade off of this level and, stop loss, and you say the market is going here to this level. You're very, very excited. The market is going to one ratio 6.7, but then the market was all in profit, right? You didn't feel the need to take anything and take any profit and whatever whatnot, and then you realize that the market got to this level, and the moment the market got to this level, the market just started to decline right at this level, and the market goes all the way down and hits your stop loss right here, or your break even, or your some profit, only for you to think, oh, the market is going down, and maybe perhaps when as the market is going down, maybe for example, the market decide to retest maybe a level like this, you know, the market decide to retest maybe a level like this, and you think, oh, the market is going down. Okay, I've changed my bias. The market is going down all the way to the down part, only for the market to continue back to hit that particular level you was anticipating it to reach, right? Only for the market to now start to move and finally hit that level. And this is what makes trading hard. How many of you guys can relate to this? Let me know in the comment, in the chat. How many of you guys can relate to it? This is what makes forex trading really, really hard for a lot of people, because if it was a one-way journey, right, the market would never. And I'm going to give you a live case study right now. If it was a one-way journey, we will all be multimillionaires, right? And this is what makes it seem like the market is super hard, because the market doesn't move on a straight line. So let me give you guys a case study. Let me give you guys a case study. How many of you guys have called the 204 level for quite some time right now? If you guys can remember, maybe about 2 months ago, and in the beginning of the year, I said we might most likely be moving towards the 208 level. If you guys can remember, I said that. Go check some of my past live stream, and at the time the market was here. At the time the market was here. So right. So I called this out that the market was going to be going to the 208 level. Now let us look how the market has moved. Now, because we're looking at it on a daily time frame, it doesn't seem like a lot, but let's take it to maybe the 1 hour time frame. Now, because I said the market is going to the 208 level, if you guys can remember, so for some of you guys that have been with me, you know, from my first live this year, you're going to realize that the market wasn't just moving on a straight line. Look at it. The market is going to have some major reversals. Some of these reversals are temporary, but they are so deep on the lower time frame. Look at them, right? So this is what makes trading really hard. So while you're looking at it this way, it might seem like, oh, the market is making a move to the down part, the market is going down, oh, it's gonna go down. But what you're gonna realize is these are just a little bit of point of retracement for the market to even go higher. And when you look at it, you would have expected the market to just make that move and hit this level by now. But look at it, it's almost take the whole year. This has been since April, and the market still kept moving and moving and moving. Look at this big and massive retracement. When you bring this big and massive retracement to the lower time frame, look at that. Look at this massive retracement, right? On the 1 hour time frame, look how well this thing dropped, right? Look how crazy this thing dropped, right? So the market just keep dropping and dropping, and you might just change your mind that, oh, the market is going down, only for the market to move up again. And look at it. This is usually a consistent pattern in the market. Now, what can really help you to keep track of what is really going on in the market is when you have a knowledge of structures. So you can be able to say that, oh, the market is reversing based off of a major structure, or the market is reversing based off of a minor structure, but the overall and the major structure is going to the upside. So what do I mean? So let's say that you are targeting a move to this level, and this is very, very important. And I wanted to show you guys before I get into my analysis so you guys can have an understanding of how it's done. So the textbook example, we say that the market is making a move from this level. Let's say you've got into your buy right here. The textbook example will look like this, and the market is making a move. So let's say this is a daily time frame. This is what you would have thought the market would do. But the real life example looks more like this. The market making a move to the upside, making a move to the upside. And what happened again? You saw a situation where the market is rejecting. Probably the market bounced off the Fibonacci level again. The market went back up again, and then maybe you have a previous resistance to the left, a temporary resistance. You see the market again making a retracement, going back up, then giving us a fall again. You probably will think, oh, the market is going down, only for the market to now start to make a move up. Now, mentally, you would have pictured that the market is just only going to make a move like this, and oh, this is a 1 ratio 7.3. But now, if you pay attention, if you understand structure, that oh, the major structure, the market has shifted to the upside, but there might be some trading between. So this is what it's going to look like in real time. You might decide to buy and say, okay, there's a resistance, maybe there's a previous resistance here. Let me just take my profit right here at maybe 1 ratio 4. Then again, oh, the market is going against a whole structure. Now, because this level is an area of a previous resistance right here, you might want to take a trade when the structure shifts again to the downside. You can see maybe this might be lower time frame trades, right? Remember that we are saying that this is a daily time frame. So probably on the 1 hour time frame, you might still see trades like this. And when the market gets here again, you might see a trade opportunity to even buy all the way to the upside to the next area of resistance again. And you see how the market will keep moving, and you keep finding this trade. You keep finding buy and sell while you keep the overall context, right? Then you can now be able to say, oh, the market is shifting structure again. Maybe perhaps if you shift the structure, if I'm able to get in, I can be able to sell all the way to the down part again. And because the market is still on a very higher low, or perhaps this time around the market came to reject right here at this area of support, because we know that the market is still going to the upside, then you can now be able to say, you know what, this, let me buy now, because now there are no resistance, previous resistance, right, that could hold the market down. Then I can buy all the way to the top, right? So this is how it's been done, right? So this is what I would refer to as, this is textbook thinking, right? This is textbook thinking, right? So this is textbook thinking, and usually what you're gonna see here is, this is a real case, right? Real trading, outcome. So this is the real trading outcome. So this is what makes the market very, very tricky for a lot of people. And it is not really hard, because once you're able to decipher this, you kind of realize that this becomes very easy for you, right? And when you kind of look at how much you can make, the risk reward, provided you're very accurate, you find yourself making more than just having this textbook thinking and holding it. In fact, most people will panic out when those deep retracements starts to happen, right? And if you guys are with me, you will see that I have a perfect case scenario right here. This was a perfect case scenario. You guys, if you remember, we took some of this trade, and at the time I was looking at the market drop, hitting this level, right? My the analysis we did at the time, again, this is the very importance of when you trade one pair, right? This is very important, because you can always reference to everything, because you've been trading everything, right? And if you guys can remember, we had a trade right here on the lower time frame, where we were actually looking at a situation whereby the market may reject right from this level, and we're looking at the market moving all the way to this level. But look at the market. I remember that we closed the trade right here. If you guys can remember, you could go through my Telegram. If you're new here, all my Telegram channel, you can scroll through, look at the wins and the losses we've taken over the years, right? Um, I remember we took out our profit right here, and if you guys can remember, we sold a trade right here because why? The market was in an area of resistance. Now, do I know that the market is making the way up to the upside? Yes, we know definitely that this is what we're looking at. We're looking forward to the market making a move from this low right here to this high. We know very sure that that is what we're waiting for. But now, this is where the knowledge of structure now starts to come in place. Why? Because I could tell right here that we have a structural point right here, which is the most significant lower high where the market is moving right here. So I know we have a most significant lower high, but I know at the same time that the market is the major structure shift that we are experiencing in the market. What is the market picking up this higher low at the time? Right? So I know that the sentiment is to the upside. The sentiment is to the upside, but the market is always going to hit those specific levels, which may not be significant in long term, but they have effect on the short term. So what happened when the market hit this level? What did we do? Right? If you guys remember this, we went to the lower time frame. We saw a structure shift right at this point. We saw a structure shift right here for a change of character. And what did we do? The moment we found a discount, what happened? We sold all the way to the down part as well. But because we know the market is going to the upside, we know that the market cannot come back to this level again. So we looked at our Fibonacci level and we actually sold to the Fibonacci level, getting ready for a buy. So you can see that even though I remember this was the trade right here, somewhere around this point. So even though we had this buy right to this level, we're still able to find a sell back to this level, and then we could find more buys. And I remember that the last buy we took from this level was when the market gave us a rejection right here. I think when the market shifted structure again right here, which confirmed that the market is not touching this low right here. The market shifted structure right here again. We waited for the discount, and I remember we got into this trade right somewhere around here. Then we were able to finally buy to the upside. So it's not just going to be a black and white, right? So this is why it is very important for you to understand structure. And now I'm going to get into what I'm going to be looking out this week, and you're going to see how I'm able to use knowledge of structure to be able to identify the most probable move of the market. So what do I do? Let's go into the daily time frame. If you are finding it very, if you really want to understand how to analyze the market, I've done some videos on multi-time frame analysis. In fact, most of my videos are on multi-time frame analysis because I believe everyone should be doing multi-time frame analysis. But if you still find it hard, you can reach out to us or Swingtrade FX Academy, and we can be able to help you through on how you can get into trading, or you can just hit me directly. Then we can be able to help you get that done. But my last video, I tried to speak more into how you can do your multi-time frame analysis. So this is where I want you guys to pay attention. Okay, this is where I want you guys to pay attention. So I'm gonna get into it right now. So again, now I want you guys to pay attention step by step. So the first thing you want to do when you want to analyze the market is to look at the overall context. Again, what does that mean? Look at the overall trend. The overall trend of the market says we are going to the upside, right? And look at this, right? We've broken this level, and I can call this prediction for a very long term. I have a long term account, I hold, and I can tell you for a fact that the market is making its way to the upside. Pounds is really bullish right now. Pounds is really, really bullish. But because it's really bullish right now doesn't mean that it's not going to give us some of this retracement, right? So I know exactly where the market is going to. It doesn't take any technical skill for you to know where the market is going to, right? So, but then after the market broke this level, now this is where the story gets very interesting, right? After the market broke this level, what do you see? You saw that the market was going back up, and what did the market do? The market started to retrace. So as it starts to retrace, at the time, where was the low? Right, we had this low right here because this was the last level that the market got into, right? This was the last level that the market got into before the market got to that high. So this is a situation of the market now retracing back into this level. So we had this low, and we had other lows too, if you kind of pay attention, right? we had all that lows, we have all of this low, and I'm not really interested in that. I'm just interested in the most recent information that the market is giving to me. So what do I have right here? I have a higher low. So this higher low, right, is the most significant higher low that the market is making in the market, right? And that higher low was what led us into the break of this level. Just give me a second. The higher low right here was give me a second. Um, okay, let me get this so that you guys can have it. Okay, very good. Very good. So I was saying that the higher low was what led us into breaking this level at the time, if you guys can remember, right? So we broke that level, and when we broke that level, what do we have? We have the market making a move to the upside in this level, right? Very good. So now that we know that, what did the market start to do? The market started rejecting back right after it broke this level. So what does that mean? That means that the market is coming in for a retracement. So even though we had a situation right here where the market is rejecting from this level, we still have a situation, right, where the market is still on the uptrend. So this market is still on the uptrend, right? So this kind of makes sense. So this gives you the context. The first thing you want to get in the market when you're analyzing is to get context, is to have a knowledge of context. Don't just pick support or resistance. You see, it's really very appalling to see that most people just pick support and resistance, and they want to make trades around it. Yes, this support and resistance have a short-term reaction, but you want to be very clear. Most people take support and resistance that could effect a short-term reaction and wanting to take a long-term trade on it. That is totally wrong. So if you're on an uptrend, you want to know that I am on an uptrend. I want to know that I am trading in the direction of the uptrend. And where do I think the market is going to? In fact, if you ask me where I think the market is going up to, I usually don't go into the weekly time frame as much, but let me go into the weekly time frame. I can tell you for a fact that the next destination of the market is definitely this level, and I'm going to be here. When the market hit this level, you can bookmark this live, and you will see if the market is going to hit that level or not. That's the level the market is going to. That is the level the market is going to. So what do we have? What we had right here was just the market breaking this level. And what is the market doing? Retracing back to this level for a continuation to this level. So this itself is the most important thing you can do in trading. This itself is the most important thing. You don't need all the informations in the market. You really don't need all the information in the market to make the next decision. You just want to make what is the next solid decision in the market. So this right here, as you're seeing, it can just be a break of structure, right? The last high was broken, right? And that is exactly what's going on. So what do we have? A break of structure. Price go to this level, and the market starts to do what? The market starts to retrace, right? So we can call this area of resistance. So if we look at prehistorical data, you can tell why did the market hit an area of resistance right here. If you zoom in, I may not want to get into the intricacy, but if you zoom in, you're going to realize that there was a previous area of support right here that the market hit at this level, and it gave us an area of resistance. So I'm trying to give us a very comprehensive outlook to it. So I'm doing an analysis and I'm teaching you guys at the same time, okay? So most of these things you just need to pick the context. So what you want to do on the higher time frame is to pick the context in which the market is moving, right? So once you're able to pick the context in which the market is moving, it becomes very simple. So we can call this an area of resistance or area of retracement. Again, like I said, you will always, as the market is moving, right? I remember this trade very well. I remember that I was on a buy trade on this level, and the moment the market starts to reverse against me, I remember I closed very fast, because I went to the higher time frame to say that I'm very fully well aware that this low right here is coming right here, but the market will not always come to this level. Now, it's not far-fetched that the market hit this area of resistance right here, and even though we know that the market is coming here, what has the market done so far? Look at the drop. Just look at it. It has dropped and it has opened, hundreds of trade opportunity right here, and the market is making this move to this level. So this is the reason why it is very, very important for you to have a knowledge of structure. Never underestimate this. And for people, I can see some of my students are here live, and one thing you can tell that I taught you guys in, for folks that took one-on-one program or even the freedom course, I was very big on fractals, right? There's something we call fractals in trading. Market moves within different range of structures, within different time frames. So you want to be able to be excellent at understanding this fractal. Once you have an understanding of that, I can tell you technically 70% you're already a very good trader. So that is one of the things that you really want to see, right? Hold up a bit. Let me get my mic plugged in. Let me get my mic plugged in. Okay. Can you guys still hear me? Let me be sure you guys can hear me clearly. Can you guys still hear me? It's a master class. Can you guys hear me perfectly? Let me know in the chat box. Okay, you guys can hear me? Okay. Okay. Is it clear now? Okay, let me know in the chat now. You should be able to hear me very perfectly right now. Okay, so I got a few more minutes. So now, do you see the concept I was trying to explain to you, right? A lot of people would have gotten in right here, right? And move the stop loss and target this level right here, right? But look, I'm sorry, and target this level right here. But look at what the market has done, right? The market went up and it was going all fine, only for the market to hit just a temporary resistance on the upside. And look at the effect of that temporary resistance. Now the market is picking back up and moving. So I'm gonna give you different levels that the market is gonna hit between now, end of the year, and next year. Watch out for 204 level, which is the next level that the market is hitting. Watch out for 208 and watch out for 215 levels. Simple, right? Those are the three major levels that you find the market, getting to. So now, you can see the concept of how it's very important. And I can tell you for a fact that most people who took the trade off of this level, when the market was coming down to this level, would have panicked out. Imagine the market reaching 80% or 75% of your trading profits, taking profit level, and the market came back almost at break even. So only a few people will be able to hold it through and just load in more opportunity. It takes people who have practiced it over time. So there are chances that the folks that got in right here would have panicked out, right? So this is why it is very important. Now there are also chances that folks who understand how to play with this different structure would have found different opportunities. And so far so good this year, we've just been right here. So far so good this year, we've just been right in between this level. Can you imagine that, right? So this is why it is very, very important for you to get into the market. So context has been gotten from the market. So we have that the market was rejecting off of this level and the market made a retracement. So when the market made a retracement right there, where did the retracement end? So we have a higher low right here. So now what do we have again? Now you can see now that we're now having a new higher low right at this level. So this sort of makes sense what the market is doing. So you can see how we're now bringing it into context. We are understanding what the market is doing. So we're having a higher low right there, because after this retracement got done, remember that we had this level, and we had this level that the market broke right here. Then we start to have this retracement. Then the market picked up from this retracement right here, and the market is making a move first to this level, then next to this level. But we don't want to look at the bigger picture. We want to get our next trade, right? So now that the market has made this higher low right at this level, what is the next thing that we want to do? It's very, very simple. This is the time where we now want to start looking at things, way more deeply. So what do we have right here? The market started to make a higher low level right here. So what do we start to have? Higher high, then we have another higher low. So you kind of see the sequence, right? So if I ask you now, based on structure, now what is the major structure of the market? The structure is moving towards the upside, right? Now within the structure, you now start to see even smaller structures in the picture. So what does it look like? We have higher high, we have the higher low, right? Then we start to have another smaller structure, higher low, then high, higher low, which is right to this level. So this kind of makes sense, right? How we got to this point. So the most important thing we want to do is to understand that, okay, so now we're having a situation whereby the market is moving on a higher low structure right from this level. So let me just identify that. So we have a higher low right here. I'm just gonna copy this. Then we have another higher low right here. Then you can see that we have another higher low right here. So this kind of made sense, right? So the higher low, so we have this level for the market to hit, but now along the journey, again, after the market made this higher low, it gave us a high, right? So at the time, this was the area of resistance where the market was at. So this shouldn't, now you kind of understand why the market some weeks ago kind of rejected this level and came back and almost immediately found this momentum back to the upside. So all of these things are going to start teaching you how the market was moving. This area of resistance, is it really temporarily significant? Yes. But on the long term, is it irrelevant? Yes. Why? Because the market has been very, very clear that from this level, we're taking the market to this level. So there are going to be resistances along the way that will kind of give us some breakdown, like this level. Then, these are the things you start to see in the market. So the moment you understand this, the most important thing that this is going to do for you is that this is going to help you not just only be able to take your profit, but it helps you also to take opportunities along the journey while you still have the knowledge of the major move. So the major context of the market right now is that we're going on a resistance, we are going on an uptrend. The structures have been characterized by a lot of higher lows, but it's also very important for you to always look at prehistorical data. I usually would say look to the left. When you look to the left, you can find major levels that could actually slow the market down, cause a short-term or long-term retracement, and keep buying up. But even though you are selling the retracement in this case, always keep in mind that the market is going to hit a specific level before this market starts to move to the upside. And this is how it works all the time in the market. You don't really need to make it overly technical. It's just the law of how the market works. When the market is moving in the direction of all this total context, it's going to hit some area of previous resistance or support where it's going to have a short-term reaction. This short-term reaction on the higher time frame is what we consider a downtrend on the lower time frame for the market to keep going back up to the upside. And this is just a perfect example of what I've explained. So look at this. When the market hit this higher low, this sometime around April this year, what happened? When the market got to this area of resistance right here, previous area of resistance right here, what happened? Look at the sell to this level. So the market gave us a very, very strong sell to that level, right? So this kind of makes sense. So when you bring this sell now, because we're looking at it on the daily time frame, it might not seem like a lot, but when you take it to the 4 hours and then you take it down to the 1 hour, you can see that small insignificant sell on the higher time frame, you can literally, if you're able to pick the trade up, depending on your strategy of entry, you can be able to take a 1:8 trade on this, right? So this is how you learn how the structure and the market works. So I'm teaching you at the same time I'm analyzing what I would expect the market to do. So now what do we have? This area of resistance was hit at the time, which is a temporary one. And what happened? This area of resistance rejected, for some time. And after some rejection, what do we have right here? We have this area of resistance broke. So what do we have? Why this area of resistance rejected? What do we have? We start to have a situation where the market was moving on a higher low structure. So when you look at it, you can see the higher lows, higher lows, higher lows, higher lows, and higher lows. So it's still the same thing. So these are just smaller higher lows within a major, high low structure, which is in direction to the overall trend. So right now, pounds JPY is extremely bullish, right? And all you have to do is just to know the next level the market is going to get to before it comes to down path. So what do we have right here? We had this last low right to this level. So what does that mean? So now that we have this last low to this level, what we're just going to do right now is to identify that this was the last low right to this level that caused the market to give us this break of this resistance. So after the market offered us this break of this resistance right to this level, right? After the market offered us this break of resistance, telling us now that we have to move to the next level. We are going to the next high. So usually, again, always look for the next level where the market might be getting into. So you look for historical data, and you can see that this is the next profit target, and this is the reason why I've called the 208 level for a very long time. So we are going to 204 for a long time. So we are going to the 204 level. This is the last level where the market got to before it broke it. So what has happened? So what you can see that has happened to the market right here is that after the market broke this level right here, what do we start to have? We start to have the market reject back. Now, usually when we want the market to reject back to this level, we'll be looking for a 61.8 Fibonacci level, and you can see clearly right here that the market hasn't even hit the 61.8 Fibonacci level. So this is what you want to see. So this kind of makes sense right now that this is the most significant higher low. So this is a higher low. So you want to be able to characterize it anyhow you want to see it, anything that will not make you forget about it, right? So if once you start to get used to it, it kind of make a lot of sense. So now that we have this higher low, what do I think the market is doing? It's very simple. From this higher low, what do we have? We have the market start to move. After the break, it made a retracement. The retracement could not be sustained to the low. Then it went back to make a high, and now we found this break. So at the time when the market went to make the high, we have this trend line right here rejected that level. So we have 1, 2, and touch number 3, right? We have that trend line rejected that level. So that means that even though the market is going to the 204 level, there are still some levels in the market that the market has to take out, right? So the market now, this is now a case of, will the market continue to this level in this way, or will the market retrace even way lower? So this is just the answer, the question. If you're able to find this answer, you can really, really be confident in yourself that whatever the move the market is going to make, the market is definitely going to still go back to the upside, but the market is going to give us some opportunities to downside. So what is holding the market right now? The market is closing back into the area of resistance, but this area of resistance is broken. So what do we have? Now we have a structure point right here that the market continues to move up to the upside, and you kind of see the reason why I was pushing for selling right now. So what has happened? The moment the market broke that level, we have a structure shift right here. So we have a change of character of the market. So that means we are looking at a situation whereby the market will actually most likely go on a downtrend, right? Before we hit the 204 level. You can see. So that means we're not just looking at this 204 level from this level. That means we could have a situation whereby now that the market has changed its character, we could have a situation whereby the market will give us some sort of like discount, and even come all the way to the down part before it starts to go to the upside. So this is how you have an understanding of what the market is doing. So while my bias is shifted or geared towards the uptrend, I am still seeing opportunities to the downside. So what am I looking at? It's very, very simple. So on the 4 hours time frame, I identify all my levels and definitely identify the reason why the market has been rejecting. So this really affected this rejection to the downside. And now we can see that the market closed back into this area of resistance, right? So we have an area of resistance right here. We have an area of resistance right at this level, right here where the market was rejecting. And just give me a second. So we have an area of resistance right here, which is also, paired with this level right here, which is also paired with this trend line level right here where the market was rejecting. Okay, so you want to note that. I love to keep my chart clean. So now that the market has given us a change of character right here, so you can see it's very, very obvious what the market is doing. So what do I anticipate for the market to do? It's very, very simple. The market I anticipated to come lower, even though we are looking at, the 204 level. Just a second. Just a second. I hope you guys are really following through. Let me know in the chat. If you're following through, let me get some yes in the chart. Let me get some yes in the chart, okay? So now, what are we looking at? We're looking at a change of character. That means I would anticipate for the market to come lower. So I would see a situation where the market will come back to this level and perhaps find a support right here to this level. And then we can now continue to go to the 204. So while I know that the market is looking at the 204, but because of the change of character, this is a very big change of character right here. So I would love for the market to make a move to the downside. So now, am I picking a trade yet? No, I'm not yet picking a trade, right? I'm not yet picking a trade, but this is where I now want to see things even way more closer. So now let's look at it, right? So we had a situation on a higher time frame where the market is right here to this level and the market has broken this level. We would expect to see some discount and there to sell before we start to buy. So for me now, I'm looking at an opportunity where I could buy the discount up, then I can sell the retracement and I can buy the continuation. So you can see how I'm able to build up, what I'm going to be looking at for the next couple trades. I want to buy the discount because these are big move. Obviously, this is still on the 4 hour time frame. So what do I have? It's very simple. This is where I now go to the lower time frame. So remember, now I have a context of what the market is doing near term while I have what is doing long term. So I know how to prepare for the long term, still hold the bias of the long term, but still work with the bias of the near term, the short term, bias. Okay. So now what do we have right here? The moment we had this change of character, what am I looking at? This is where I'll go back to the 1 hour time frame. So now that I have a change of character right here, I want to be able to buy this discount to this level, right? Then I'm going to be able to sell the rest, right? This is going to be a very huge sell for me, right? So what do I wait for? It's very simple. I look at this. This is where I start to now pick the structures of the market, right? So I have a situation where the market is giving me lower low, lower high. Then I have, the market giving me a new structure right here. Again, so what do I have? We have all of these structures start to come in place. Higher, low, 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 lower, high, lower, low, lower, high. I remember this previous area of support that the market broke at the time. So I could see that the market might be making a move back to this level. So this is a level of obstacle right there. So if you're already buying this, I know some of you guys usually will send me your analysis for me to look at it, right? If you're already buying, you got to be careful with this level, okay? So what do I anticipate? I would anticipate for the market to give me a proper alignment of the structure. So what do I think? Very simple. I think this level right here. Now, this is where I start to build my opinion on what to do. Remember, I have a bigger picture that I want to buy, I want to sell, that I want to buy again. So my next trade opportunity most likely will be a buy, to the discount level, then I could sell, and that's a lot of move that could happen in a week. So what am I looking out for right now? This previous area of support right here has been broken right here at this level. We might have a resistance right here, and the market might sell back down to the 61.8 Fibonacci level that I mentioned earlier. So what do I mean? Let me take all of this off. Let me take this off so that we can have a clear understanding of what the market is doing. So what do I mean? Let me go to the 4 hours time frame. So usually when you get so good at it, right, you don't really have to take a lot of time in the market to analyze. And the reason why it's taking us some time is I'm trying to teach you guys while I'm analyzing at the same time. So what do I think is going to happen in the market? I think the market is first going to sell back to the 61.8 level right here, because now we're having a situation whereby the market is right here at this level. So I believe 100% that this market is still not yet done with the sell before it moves up to the upside. So now I would expect to see some sell back down to this level. In fact, if I see a very good opportunity on the lower time frame, like 30 minutes time frame, best believe that I'm going to be on this trade and I'm going to sell this all the way to the down part, right? And this is probably going to be my first trade that I'm going to be looking based off of confirmation. So if I get a very good confirmation up on this level, I'm still going to be on the watch for it. If I get a very, very good confirmation up of this level, and I see a very nice change structure, something that looks more really nicer like this, you're going to find me selling to this 61.8 Fibonacci. And once the market gets to this 61.8 Fibonacci, my next area that I will be targeting will be this bigger discount, right? Now, you could have said that, oh, why can't this Fibonacci? Because I know the kind of questions that a lot of students ask me is that why can't this keep going back to the upside? It's very simple. Remember the context of what you're trading. This is a very big change of character. So what's the like I said, there are levels in the market that just kind of give us some reaction. Most of these reactions are short-term reaction, right? So what I would see for this level to do, this Fibonacci level to do, would be to reject the market and give us some sort of discount. And when the market hits this discount level, the best thing for you to wait is to see some kind of shift in structure again, then you can now set it down part. So what am I looking out for this week? Based off of that, it's very simple. I will be looking out for a trade opportunity around this level. So if I get a very good structure shift right from this level, best believe I'm going to be finding my entry right in on this trade. Okay, I'm going to be finding my entry. So what are my different projections that I'm looking out for this week? I'm going to be looking at a trade opportunity to sell right here to continue this to the downside. You can see, notice when I was on the daily time frame or the 4 hours time frame, I didn't even get an opportunity to even see a possible opportunity right here. So the more you look at the higher context and the more you mix it up with the lower context, the better you're going to find. And what am I going to do when the market gets to this point? This will be my second move. I'm probably going to find a buy, depending on how the market offers me a low, and I'm going to buy, somewhere to this point, which is going to be the 61.8 Fibonacci again of this whole move. So these are my two trades opportunity that I'm going to be scouting next week. Then later on, later in the week, in 2 weeks time, that I can be looking forward to having the major sell to this level. So this is how I get to prepare for my trade, and this is how I get to kind of use the higher time frame and the lower time frame interchangeably. So what is the basis for my trade right now? The basis for my trade is that the market has given us a shift in character. And even though the market gave us a shift in character, I would have expected this 61.8 Fibonacci level to be the buying force that is going to send the market up for discount. but the 61.8 Fibonacci level hasn't hit the market yet. So what am I waiting for? I could see right here that the market now came back right here to this previous area of support that it got broken right here at this level, and this level right here might be an area of interest for me to sell for to the 61.8. Now guys, now that I have this area of interest, does it mean I'm just going to jump into the market blindly? No. This is where your entry strategy now comes in place, right? And this is where I teach my entry strategy. I have different entry strategies I use in finding the market for people who attended my bootcamp. And perhaps we're going to have, if you want to see bootcamp 4.0, let me know in the chat box. I've been thinking about that actually, and I've been getting a lot of people wanting to see the discount, the boot camp, because it's, you can easily get that for cheap, and it's so much value. Okay, let me know in the chat box. You want to see the boot camp 4.0. Yep. Yep. Yeah, shout out to everyone liking this live. If you want a lot of other people to also benefit from it, you could share it as well to people. So now, all I have right now is an area of interest, right? So far, this has been an area of interest for me, and you can see that, and you can see the behavior of prices right here, that after the market started to get to this level, momentum started to go weaker and weaker and weaker, right? So what you can see right here is a point of possible trade opportunity for next week. Okay, and what I would love to see right here is, I would love to see some sort of like rejection right here, or change the structure, right? And when that happens, you're gonna find me definitely sharing a trade opportunity right there. Something more like this. I'm probably going to look at something more like this to offer me about 1:3, 1:4 sell. I'm definitely going to take this trade. This is a high probability trade for me, right? So now, after the market hit this level, best believe I'm going to find a buy immediately right here. I'm going to find a buy immediately right here, and I'm going to be buying the market to the upside upon my confirmation. So these are the different zones now that I'm going to find trade opportunities. So what have I done? What I've done is I've been able to analyze the market. I know that the context of the market is in an uptrend from what we did on the weekly time frame. So let me just refresh your mind so that you guys can have an understanding of what we're doing. From a weekly time frame perspective, hold up. From a weekly time frame perspective, what is the market doing? Right? The market is rejecting this low right here, and it's making its way to 215 level. So that means the pounds is going to appreciate over the Japanese yen, in a crazy fashion in the next couple years and months, right? However, because the market is going there doesn't mean that there are no technical, obstacles, technical resistances and supports, along the journey, right? So what do? You find a way to identify this level out. So what did we do on the daily time frame? What we did on the daily time frame was very simple. We identified that the market has reached this resistance and is rejecting and is making its way to the next level, 204, then 208, then before we now eat the higher level. But what did the market do? Remember, I told you guys that from the understanding of structure, you're going to see that the market doesn't move on a straight line, the textbook example. The market is going to find breaks, find deeper retracement to push further. So what we are literally doing right now is understanding that the market is in a bullish trend, but the market right now has given us a change of character right here, indicating that we're about to have a deeper retracement for us to continue in the upside. So what we're trying to do right now is now to play around what the market is doing here. So for us to play around it, what do? We come to the 4 hours time frame and understand that this is the move, this is the last higher low, and you can see that the market right here has changed the character right here. So what do we think the market is going to do? The market is going to give us a discount and for a further sell. However, when we looked at it closer, we saw that the discount, the force that the market needs to, offer us this discount, the force that the market needs to offer us this discount right here was not it, right? That means that the market will still make a move down before it offers us these discounts to the upside. So how do we know that the market is going to give us a move to the downside? Then this is where we come to our 1 hour time frame. So since we're playing with the with this change of character right now, and for a further sell, we want to be able to now take the trade batch by batch. So what do? We found the previous area of support right here, which is currently turning into a resistance, and I said to you guys that this will be my first trade for next week. I'm gonna sell it all the way to the down power. When the market hit the 61.8 Fibonacci level, then I want to see if I'm able to use this level as an area of interest again. Then if I find a structural confirmation or my other confirmation, entry confirmation that I'm looking out for, then you're gonna find me buying. Then when I buy to this level, I want to get out of the market. Then I'm gonna give myself this major sell. So what does it look like that I'm trying to do in the market? I'm gonna sell right here, buy the discount, and sell right here. So this is exactly every single thing that you're gonna find me do in the market. So this is what my next moves in the market will be like. And I will give you guys an update. If you're not in my community, you can join my community. I'm going to be sharing update on these trades, and just you guys have it for free. So this is my outlook, and this is subject to confirmation. But that first trade will be my very first trade next week. This is a high probability trade for me. And what is the confirmation? My confirmation so far is the market is reaching out for a low that was broken, previous area of support, turning into resistance. The market hasn't hit the Fibonacci level, which is in the force that will send us to the upside for discount. So I need to sell the market to that level. So what am I waiting for right now? I can see that there's already weakness in candlestick from a 30 minutes time frame perspective. And once this weakness right here continues, you're going to find me execute this trade. So usually it's always good to wait. There are two entries, right, that I usually would love to use. There's the shift to structural entry, but you have to be very accurate if you're going to use that. And these days I find way much more aggressive entry at those point of interest, right, which is something I'm teaching all my students right now, you know how to be able to find those kind of entry. So this is what I'm going to be waiting out for, and I hope you guys have learned so much. Usually it takes less than 2 minutes to actually analyze the market to know these moves, but if I'm teaching you guys, I want you guys to understand, so I love to spell it how it is. So if there's anything I want you to take out today, it is very simple. If there's anything I want you guys to take out today, it is very, very simple. It is number one, always um number one would be to always what's the word um number one would be to always actually have the overall context of the market, then find the medium context, then find the recent context of the market. So even though you're trading the recent context of what the market is going to be doing, you know the overall sentiment, you know the midterm sentiment, and don't always assume that the market is going to hit your target. Yes, the market will hit that your target where you want it to go, but there is going to be a lot of retracement, and the market will move, in and out of structures, along the journey. And I hope this has been really helpful for you. And if you are there and you're still confused and you really want to have an understanding of how the market works, I would definitely recommend that you send me a text. You're going to find the link in the description, and let me help you walk your journey in trading. It's not really a lot. It's not really something really out of the norm. It's something you can do, I can do. And let me sign you up to our academy. We're not going to be taking a lot of people for now because I just enjoy the phase I'm in right now, but we're going to take a few persons. So I hope you guys enjoy your weekend. Watch this video over and over again. Share to friends. Share to people that you care about, that you want it to be profitable. and pick up the lesson, extract the lessons as much as possible. So thank you guys so much, and I'll see you guys on the next live. God bless you guys.